Good morning, everyone. Hope everyone's doing well. Welcome to the channel. Good morning, traders, YouTubers, everyone else. Today, we're in a different location again, still in Bulgaria. We're in the capital, in a different place. And instead of the annoying little cat that we have, normally we have a dog. Less annoying, but walking around for sure. You'll probably hear his footsteps. Pretty chill, though. Doesn't make any noise whatsoever. So it's not going to be like, well, other than the breathing, it's not going to be like the cat that's jumping around and distracting me ideally. So let's go ahead and get this started. We have a lot to talk about today after that CPI print yesterday and what had happened with the general market. What a wild ride. So yesterday we got a hot CPI print, dumps the market. We had everything over expectation, month over month. CPI 0.4% versus 0.2 expected. We had slight increases in the core numbers and the year over year, just the general number, both core and year over year for both, I should say. Slight increases, nothing that insane. And yesterday, I was talking about this. I wanted to pretty much just buy the market until the close. I wanted to see if this thing could ape into the close, right? I think those buyers were pretty aggressive. There was a lot of buying towards the lows, and that's exactly what we saw. Now, naturally, did I hold out the full position for the whole side, for the whole slide to the upside? No, not necessarily, but there was a lot of decent buying that came out. So why did this happen? What the hell happened? Where are we coming? Where are we going into? Can you get out of here? Where are we going into? What are we getting ourselves? Okay, well, not as annoying, but just pulled the cable out. What are we getting ourselves into the coming days, weeks, so on and so forth, after this massive turnaround and a huge pop that closed on the day, right? We had a massive gap to the downside, which started, the gap filled, and we got that even stronger pop into the close. With this, we had a lot of volume and a lot of buying, which is an indication that we are going to see a temporary bottom. Is a bottom put in? I don't think so. I don't think we're close to the bottom. I think there was some expectation that this would be the peak number of inflation. I don't think that's true either. But where do we sit from here? I think there is more upside in this, especially today. It's Friday, close out the week strong, and we'll go from there. So massive comeback yesterday, right? Futures spiked in hope of UK resolution of its debt liquidity crisis, which plunged after a core CPI number came in hot, then rallied throughout the session. By the close, we saw the S&P, NASDAQ, and Dow Jones all gain well over about 2%. The term roller coaster is one of the most overused, lazy terms to describe this market, but in the last 24 hours, naturally, that is exactly what we saw. As we saw major indices turn around really insanely. Now, ahead of the CPI data, we saw that futures were spiking a little. They bottomed out at minus 2.4% on the S&P, closed positive 2.6%. Massive round trip. That was a range of 5.5 percentage points. Dow rallied 1,400 points. We also saw that the tick index, right, if you're looking at the advanced decline, went from negative 1,900 to positive 1,900 for the first time in a very long time. This is only about the third time that this has happened, right, in the markets, and about the 11th time since 1993 where the SPY made a 52-week low and closed more than 4% above that low while closing green. So realistically, after that really hot CPI print, everyone was kind of confused as to why this rally came out. There was actually a lot of buying on the tape that held out at the bottom. It came at a key area. That's kind of why I was leaning a little more to that buy side, based a lot on order flow. Some speculations that kicked into the buying that we saw people just continuously buy, had been that we're coming into a very key area, which is a 50% pullback on a fib from the highs, right? That could be maybe, I don't really want to guess why the hell this happened. It was just people started buying, so we had to buy as well. A lot of algorithmic buying as well. There was implications of a potential spike or a potential peak in CPI and inflation data. Maybe that could have had something to do with it. But if we continuously look for the reason as to why this happened, you're never really going to understand where the next move might be, right? And I'm thinking that we still have a little more of that push to the upside. Now, so many people have said, oh, the bottom's in, maybe like 15 times this year alone. And this is no different. After yesterday's aggressive rally, people are still thinking the bottom's in. But from a seasonality point, a low today does fit the narrative. The VIX is still sitting around 30, which is not necessarily anything crazy, right? We haven't seen any panic selling. generally, the last few times that we've seen this throughout the year, we had this massive engulfing move on very thick volume, suggests a short-term bottom, which is something that I'm leaning towards as well, where we could print out a bullish narrative for the coming few days, maybe a week or two before we actually turn back down and actually see some of those lows getting pressed again. That's kind of the side that I lean on a little more. Um, some of the other things, the bullish narrative is mainly in a retail standpoint, right? That the bottom is in. Of course, if you look at it from a macro perspective, it's just not necessarily there. There's a lot of things that are unfolding on the macro perspective, on the macro side, that are suggesting that we're far from the lows. We haven't seen any real collapses. We haven't seen massive panic selling from the VIX. We've seen that housing, we've seen that inflation is still high. The Federal Reserve is still aggressively planning to hike, right? Yesterday we had a blip of a between 5 to 12% chance at different points of the day of 100 basis point hike coming out in the November meeting minutes. Now, naturally, that probability has dropped off here in the morning. We're back to 97, 98% chance of a hike in November, right? 75 basis points, I should say. So that 100 basis point hike is kind of off the table for now. But again, things can change. So where do we stand with this? Realistically, a lot of tech names did rally aggressively. Apple was one to watch that I talked about yesterday, 136 area. We leapfrogged through that massive ledge there, and that just opened up some of the upside. And I think that we could see those on the SPY, 378, 380 area. That area can be tested. I was looking at 373, but now that I'm looking at this and the aggressiveness, the way that we held overnight, I think there could be a little more push to the upside based on that. If I take a look at these futures really quickly, we're holding out really well. We had a very, very nice pop off of some key levels that we had from yesterday, 3660s. Right now, we tagged 3731s. I'm just looking at this on a different screen. We're doing well, right? Prices are continuously rallying. And individual names, you can take a look at tech. Tech's been doing well, like semis, NVIDIA. I'm going to be watching above 122, opens up into a distribution block to the upside. Netflix as well. Netflix confirmed it will launch an ad-supported service on November 3rd with plans starting at $6.99 per month. So the company's basic with ads plan will be in addition to the existing ad-free plans, which won't change in terms of pricing. Basic, standard, and premium levels. In the US, Netflix offers its ad-free basic plan starting at $9.99 a month, and its standard plan at $15.49 a month, and then premium plan at $19.99 a month. So with ads, right, they're opening up the market for a lower priced item, which will realistically probably bring in more subscribers, which presented a very aggressive pop in Netflix yesterday. Right now, again, markets are inching higher. Generally, we had some earnings reports this morning. Morgan Stanley reported earnings. Let's see some of these earnings reports. Let me see. Come on. Morgan Stanley looks like it beat earnings but missed on revenue. Gapped lower a little. Wells Fargo missed on earnings, beat on revenue pretty well, and it gapped higher pretty aggressively. So we'll see what the forward guidance on those. I haven't really checked those out, but we're getting into an earnings period as well. Banks reporting first. Going to be interesting to see how these banks report in the coming quarters when a lot of this mortgage and inflation interest rate data really starts to affect these markets. But as it stands, I am looking for more of the upside realistically today in the markets. That's just how we can continue this massive, massive engulfing days and spikes all around. And I'm still looking at some of these guys, right? With Amazon, unfortunately, pre-market, it's already ran. I was looking at the 111.50 area. We're now into a resistance point. I was also looking at NVIDIA spiking, trying to spike above 122. That's something I'm going to keep my eyes on. Tesla as well, unfortunately, spiked off that 220, 219 area into the top of the distribution. But these are things that I'm going to look at today closely with our group. And to give you guys some levels on the S&P futures, right, to give us a little more understanding of that and where we could go with these. I don't think that the Fed's going to lay off of the 75 basis point hikes, right? The 100 basis point might be off the table right now, but that CPI data, that inflation data, again, people are talking about peak inflation or just hot inflation. We got this massive rally. It's something to consider for the future. I don't think the macro is that great. So I think it's just a short covering little bear market rally here before we do see some of that selling, and I'm not interested in that just yet. So we had a key level 366163 in that region. We're well above it right now. We have a distribution block that starts at 3742. You start moving above that, right? Even yesterday when we moved above the distribution block that started around 3632, we held out very, very well and popped into pretty much the top of it, which now prices are kind of trying to hold out at 3725. I'm just reading this right now. 3725, the top of that distribution block. Let's see if some of those sellers come in. But realistically, I'd be looking to look for some longs 3704s down into the 3704s down to 3687, 85 into that region. I do like that for that potential pop. If we can move above 3742, right, we open to the new distribution block. That can realistically take us into 3796 to 3807. Those are areas that I'll be targeting before I can start to see maybe some of these sellers step into this market. So hope you enjoyed this update. It's Friday. Rub my eyes here, see some of these comments. It's Friday here, and I hope everyone's doing well, getting excited for the weekend. Again, Fridays, you don't want to overtrade. You want to keep it simple. Take a few trades, right? Lower the trade size. Just wait for a trend. Realistically, be super patient on these days and wrap up the week strong before we get into the weekend and we see what's going on Monday. Monday is going to be interesting as well. Any comments on pre-market earnings? I've only seen the bank earnings. I haven't really dived into them that much. I want to see more earnings. I'm mainly interested in the big tech earnings. Bank earnings, I'm not expecting that much great stuff from them, but we need more information for that. I think the coming earnings in banks are going to be more eye-opening as to what's going on in that part of this economy. And I think that it's going to play a big role on the overall market and our expectations to see these massive tech earnings that come into the end of the month. So I'll see you guys later.